Okay, so how did everybody do today in the market? Let's see what moved the most. Okay, top gainers. Usually the top gainers and losers are unknown companies with really small market caps. They got 1 million market cap. So no one's probably heard of this. Femto Technologies, Nanovibronics, Capstone. I've heard of Capstone. Revelation. So yes, I haven't heard it. Pacira Biosciences, that's 1.2 billion. I've done a video on Pacira. These are the gainers. So let's see the losers for the day. Blue Jay Diagnostics, 4 million market cap. Yeah, it looks like, But the market went up today, so at least I think it went up. Well, the last I saw it went up. Let's see. Spiders went down. I guess I was looking midday or something. So it went down 1.6%. How did BRK do? BRK went up 0.3%. So it's defying the market. I think I got to notice Apple was down a lot today. 5%. Kevin, I bought the dip, but it keeps dipping. That's what happens, but just stay with it. Second biggest drop in market history from high to low. Are you saying really? What time frame are you talking about? Second biggest, maybe point wise, but percent wise, it can't be that big. Biggest market declines. Well, point wise or dollar wise, it's going to be a lot because it's at a higher point. So even if it went down 3%, that's equivalent to like 20% in 1960, for instance. It's kind of like if your portfolio like if your portfolio was $10,000 and it goes down 10%. That's a decline of, I wonder what the settings are. 1,000 points. But if your portfolio was 100,000 and it went down 1%, it's still going down 1,000 points. But 1% is is not nearly as bad as 10%. So you can't look in dollar terms. It just doesn't make sense. You have to look in percents. That's how you compare different time frames. So biggest market decline. Let's see, biggest daily market decline. Here it is. It should be in percentages. Okay, daily point losses. So the biggest decline in terms of just points, not percentages. 3,000 points in one day. This is the Dow Jones Industrial Average. Close to. So the largest point decline was almost 3,000 points for the Dow on 3/16/2020. It's a lot of points, which is a 13% decline. The second biggest was also 2020. The third biggest was April 4th, so last week. So last Friday was the third biggest point decline, but it was only 5.5%, which is a lot for one day, but not nearly as bad as some of these other days. So the largest daily point. Why do they have gains next to losses? So in terms of percent, the worst day ever for the Dow was at 23% in one day. That was Black Friday, October 19th, 1987. It went down 23% in one day, which is a 508-point decline. VG do well today? The biggest gain in one day was the Great Recession, 1933, a 15% gain in one day. That's a good day. That's a good year, right? To go up 15% in 1 year. If you can average a 15% annual return, that's pretty good. That happened in one day. Let's see the so the largest, so nothing 2025. Largest intraday point swings. So intraday, it was, what's today's date? Yesterday. Yesterday was the biggest intraday swing. Today was the second largest intraday swing. The high, when you compare the high to the low, because it's a much more volatile market because there's a lot more trading activity than there used to be. Even 15 years ago, there's a lot more trading activity than 15 years ago because a lot more people have access to the markets. So in terms of intraday, so on April 4th, last week, there was from the market high compared to the market low. Well, actually, no, it's doing the market open compared to the intraday low. It went down 1,800 points. But on April 7th, which was yesterday, it had a $1,300 gain intraday. So there's just a lot more volatility, a lot more trading activity. Okay, so the most points gained in a day was 324, 2,100 points in one day. So the biggest 3 days for point gains were all in during COVID. So point gains and losses will you'll always see the newer years on top because there's just more points. Like even if the market went down 100% in 1930, it's still only what, 100 points, something, or 200 points. So it can never go down that much. So that's why the gains in terms of points, it's always, everything's in the 2000s. And most of it is late 2000s, like 2020, 2019, 2018. I did see a 2008 right here, the Great Recession. We're witnessing history. But I would ignore points. It's irrelevant. Percentages make more sense. Just like I showed you earlier, if your portfolio goes down 1% and you have $100,000, you lost $1,000. And if your portfolio is 10,000, it goes down 10%, you still lost $1,000, but this is much more dramatic, losing 10% of your value as opposed to 1%. S&P 1000, what is that? What do you mean by that? What if we go to, like, you mean change the S&P 500 to S&P 1000? I mean, I guess they could. So in terms of percentage loss, nothing is in 2025. Even the 20th worst day in market history was a 7% loss. So 2025 in terms of percent loss is not even ranking. So just remember that. Keep buying. I'm telling you, just keep buying. This is a time to buy if you have cash. In terms of market gains, so in terms of market gains, 2008 had 2 in the top 20. 2020 had 3 in the top 20. In terms of losses, 2020 was 3 times in the top 20. but I got this new I really got this new camera for my other channel. I do scratch off tickets on my other channel, and it wasn't really clear, the tickets. So so throw out some tickers. Maybe we could look at some stuff for more kiss your retirement goodbye. That's not true. I mean, the market's not going to zero. It's not like, as long as you have good stocks. Somebody mentioned a ticket earlier. That something was up. It's coming back. Don't worry about it. There's no fundamental problems with the market. Let's look at the large cap stocks. So Microsoft is down 1%. Why did Apple go down 5%? Why did Apple drop? Apple drops 5% after Trump confirms China tariffs because they're really relying on China. Because Apple is a little different than if you think of the big companies, NVIDIA, Meta, Apple, Microsoft, who are the other $1 trillion? Amazon, Google. Am I missing a $1 trillion company? Well, Berkshire, but that's a little different. So 2, 4, there's $7 trillion companies. Berkshire is more like a fund, like an index. But who is reliant on tariffs? Well, you got to think of tariffs. Companies that make things generally are relying on tariffs. So I guess it would make sense that Apple 10, 11, 12. So who's relying on tariffs? Like ranking from 1 to 10, just a guesstimate. Yeah, Broadcom is not $1 trillion anymore. They're 700 billion. So is Tesla. Tesla 700 billion. Walmart, JP Morgan. So I'm ranking 1 to 10. What do you think? So Apple, I think, would be the most reliant on tariffs, probably like a 6. I mean, they probably do make a good amount in-house, but Microsoft makes computers and other hardware, so maybe a little less reliant. Berkshire, it's hard to compare because they own a lot of Apple, but they also own a lot of other companies. But they have so much cash. They're like 20% cash. So maybe 3 because of all the cash they have. But they do own a lot of. NVIDIA might be somewhat reliant on tariffs because Taiwan Semiconductor does a lot of their manufacturing. And I'm not sure about the tariffs in Taiwan exactly, but so you'd have to look at that particular country, but I would say that they're pretty reliant. But the other companies, I don't think are that reliant on tariffs because Meta, Amazon, and Google, they don't really make anything. I mean, Meta has some what's it called? Those glasses, but it's like way below 1% of their. I mean, there are tariffs on services too. So if you pay for marketing services or you pay for IT services from other countries, that also gets hit with tariffs. So maybe they're like a 2. Tariffs will probably affect Tesla. because it's hard to make products in the US. You have to kind of, if you want to stay competitive, you have to import from other countries because it's just so expensive. Okay, so let's see what they say. Apple fell 5%, reversing gains after the Trump confirmed US will institute a levy of 104%. Now, what does that mean, a levy of 104%? A tariff of 104%? I mean, levy. I've heard a levy before. Like property tax levy is a total amount of money to be raised from the property tax. So it's like they peg like each government, like the U.S. government, each state, each town, they target all their taxes and say what percent of those taxes will pay for this. But I don't really understand 104%. Does that mean? Well, let's read on. Apple shares are already reeling from Trump's initial 54% duty. 54% duty. That just means if you buy $100 of products from China, you have to pay $54 in tax to the U.S. government, as well as, of course, pay for the products to China. And after a brief reprieve Tuesday morning, those anxieties quickly turned. Apple initially climbed as high as 190, but investors began dropping out following the tariff confirmation. Good time to buy Apple. All I know is if you were planning on buying Apple yesterday and you didn't, you get a 5% discount by buying it today. That's all we know. I can't say. You may say, well, what if it goes down another 20% by the end of the month? Then it would have been better if you waited to the end of the month, but I don't know. Nobody really knows. It could drop 20%, then before you know it, it spikes back up because Trump reverses his tariffs on China. I don't know. Okay, President Trump said he would apply a 34% tariff on top of a 20% tax on Chinese goods, bring it to 54%. Trump said he would add an additional 50% tariff on April 9th if China didn't withdraw. Okay, so that's how we get to 104%. So it is a 104% tariff. I don't know why they call it a levy, but anyways, so it's actual 104% tariff, which is not going to happen. He's just he's just saying he would add 50% on April 9th if China doesn't withdraw its 34% tax by Tuesday. So China is adding a 34% tax, and we're doing a 74% tariff. So that's how it comes up to 104%. You can't time the market. Yeah, you really can't. So Apple builds a majority of its phones in China despite an effort to move manufacturing to India. Trump has also placed a 26% tariff on goods from that country as well. So Apple's margins dropped from 46.8 to 44.4. So Apple did win an exemption from tariffs during Trump's first term, but there's no guarantee it will be successful this time around. So that's the thing. If Trump gives Apple an exemption like he did in his first term, then the stock will go up a ton, because then there won't be a fear of tariffs, at least tariffs in terms of what Apple is going to pay. a breakdown of 104% in China tariffs. So we just read how it comes out to 104%, but it's the 50% that he just tacked on April 7th, which was yesterday. 34%. So the 50%, then 34%, which is the Chinese tax. Then you have the 10% tariff and another 10% tariff. We have the labor, we have the workforce, we have the resources to bring iPhone manufacturing to the US. Of course, we all want things to be made in the United States because it creates jobs. But if you can't compete, if another country is offering a product or service at a discount, it just makes sense to buy from that other country. It's kind of like, why would you shop at the local grocery store that's double the price as Costco? Well, you might shop there if Costco's closed. You may shop there if you only need one item and you don't feel like driving to Costco. But we all do it. We all are going to save money if it's not too inconvenient to do so. But according to Wedbush, Dan Ives, doing so would take years and cause iPhone prices to skyrocket. That's the problem. It takes a lot to build that infrastructure to start manufacturing in the US, and also it would increase the price dramatically. But all these tariffs are going to increase the price dramatically as well, not just so prices are going up, so we're going to have to buckle down. Maybe we're going to have to stop buying as much, or because somebody's going to pay the extra cost. The reality is it would take 3 years and $30 billion to move even 10% of Apple's supply chain from Asia to the US with major disruption of service. If consumers want a $3,500 iPhone, we should make them in New Jersey or Texas. The concept of making iPhones in the US is a non-starter in our view. Price points would move up dramatically. It's hard to comprehend, and the near-term margin impact on Apple. Let's see Meta. Meta is trying to convince President Trump to halt the high-stakes government-initiated antitrust trial targeting a breakup of their empire. That's why I say just buy Berkshire Hathaway. Their portfolio is moves with the market, but their stock isn't down that much because they have so much cash, and they have Warren Buffett, who tends to make better decisions than the average investor. So, any stocks anybody talked about? Tesla's probably down a lot since not only is Tesla down a lot from tariffs, but they're also just down a lot from sales. Sales are going down. They're down like 60%. So 46 to 22. So they're down 54% from the peak. And I think people are mad at Elon. Less people buying Teslas. People are. Yeah, it did peak at the end of 2024. It did pass their 2021 peak. So hopefully, if you had Tesla, you sold it at the end of 2024. Because if you're still holding on, you might be at a loss right now. Your earnings, I think earnings could help a lot because it could show us that the tariffs didn't affect anything. Tesla might go down a lot from earnings because I think sales are going down. I read that somewhere, and also people are not as comfortable buying Teslas because they're getting vandalized. So you might see that stock go down quite a bit. But they were growing they were growing a lot. They were getting close to 100 billion annual revenue. Many companies going to refuse to give future guidance because of tariff uncertainty. Right. That's true because future guidance it's going to be bad for almost every company. And if they give that guidance, the stock goes down a lot. So yeah, companies may just not say anything. Just give their earnings and that's it. And what happened that day? Oh, that was today. There's a big spike in Tesla from 224 to 234. It must have been just one big trade. Let's see. Let's see. South Korea announces measures for auto industry hit by U.S. tariffs. Let's see. A stock recovery could look different. I think you should. There's going to be volatility, but I just don't think it's going to be that bad. The S&P saw its worst week since COVID. The benchmark index fell 9%. Stocks lost 12.5% in 2020. So this is not far off. But market experts say stocks recovery will likely. Let's see what they say about the recovery. So, as you know, stocks returned to record highs just 4 months after the COVID crash. But it's going to be different in 2025. You're beyond the swift rebound story. It's the worst 3-day drawdown since World War II. Well, that Black Friday, that was the worst. Negative 26%. The next day it was negative 21%. The Trump tariffs are negative 11%. COVID was it's a good buying opportunity. That's how I look at it. Yeah, that 104% tariff, that could make it hard, because that's pretty much doubling the price of everything. But the money goes to the US government because tariffs are revenue collected by the government. So hopefully the US government uses that money to possibly support the businesses that deserve it, or create new jobs. It's not like the money's going to those foreign countries. Those foreign countries are getting paid for the products they sold to us, but the tariff is taxed by the US government. So this could help. It could be a blessing in disguise. This could help us get out of out of debt. It could help us get into a better financial footing by giving more money to the government. I'm just saying, it does make markets more inefficient. Tariffs, like anything that costs money, especially that's not because taxes cost us money, but we all share in taxes. It's not like a certain group of people has to pay higher taxes than others, or a certain industry has to pay higher taxes than others. We all have to pay our fair share of taxes. The problem with tariffs is that we're kind of penalizing certain countries by saying your country is getting taxed at 100%, but your neighbor country is only getting taxed at 20%. So the country with the lower tariffs is more likely to get more business from the US. So that could shift production from China to, I don't know, like Vietnam or Mexico or another country. Rent owner is going to be raised to make up for the lost investment growth. Companies can go on a hire freeze that could trigger a real recession. I mean, yeah, anything can happen, right? Some companies may go out of business, but besides the revenue the government gets, the motivation for tariffs is to kind of encourage things to be American made. If it's more expensive to import from another country, it makes it more appealing to make it locally, because then you don't have to pay that tariff. I'm not saying it's a good thing, but there could be worse things. That's just, I just don't see it as that big of a problem, but I could be totally wrong. What do you think of ELF? ELF? Is that what it said? Or EIF? Elf Beauty? Is that what you said? Elf Beauty? This is down quite a bit. It's down like 70% from its peak. So it was over $200. And now it's down to its 2023 low. It's still up about 100% from the IPO. So it's a cosmetic company. According to the company, its products are 100% cruelty free, and it supports PETA. So I wonder if they manufacture in the US. Where does Elf manufacture their products? So China. Yeah, so they may get short term, they may get hit hard. So it's down, let's see. So year to date, it's down 59%. It started coming down a couple months ago. So the tariffs have brought it down, but it was already coming down before the tariffs. What is your next, what is the next Berkshire Hathaway meeting? It's soon, right? Isn't it coming up soon? It's on May 3rd? May 3rd. Yeah, May 3rd. So it's coming up. So 1 month away. He doesn't have many more left. I'd like to go to the meeting, but it just seems a little inconvenient. So Elf, look at that revenue growth, 300 million to 1.3 billion. Profitability is, they're profitable, not going up too much though, but cash flow, the cash flow positive, much more in 2023, but they're going to be squeezed a lot with the tariffs. So they're probably going to, it's hard to time these things, but if you like this stock, I think you're getting it for a pretty good discount right now. I don't know if it's going to go down that much more. It might. But once the news comes out, you're already beyond the point of shorting the stock. Now we're looking towards the upside. If I mean, there could be more downside, another 10%, but you've already come down a lot since the peak, or even just the past few months, it's come down a lot. Okay, I have to use the bathroom, so I'm gonna log off. So thanks for joining. I may scratch off tickets on my other channel later. I bought some tickets. So I'll talk to you soon. Thanks a lot.